Joining us all the way from New York, we've got Arvind Sanger joining in live. Arvind, hi, good morning. Good to see the SGX Nifty react the way it is already to the exit poll outcome. Do you think the market is right in moving ahead of what's going to be the outcome on 24th?
Well, I guess the market is clearly, as you guys were just discussing, is clearly happy about one risk factor, uncertainty, looking like it's going to be eliminated. Obviously, the market's going to wait for the 23rd for final confirmation, but clearly there's such a strong consensus amongst the exit polls that even if exit polls are off a little bit, and even if BJP and the NDA don't do as well as the exit polls are indicating, they should still be able to comfortably form a government. So I think that's the good news, and that uncertainty is out of the way. So that certainly will help the market. But there are other issues in the economy and earnings that once we're past this one-day bounce, that we'll have to deal with.
So you're saying it's going to be that short-lived, Arvind? 1 or 2 days at max?
I mean,
the update?
The one-day rally. After that, we have to look at what the economic outlook. Today is the rally for the election uncertainty getting out of the way, and maybe there's a little bit more on the 23rd when it gets confirmed. But beyond that, ultimately, markets are driven by earnings, not by governments, and earnings are driven by corporate outlook, and obviously we've seen many signs of stress in the NBFC market and in the consumer demand, whether it's for big ticket items or for small ticket items. So those are factors that I don't think change magically because Modi government returns. I think the slowdown in auto sales and the slowdown in FMCG sales are not because consumers were postponing their spending, waiting for election results. So that's the more puzzling and somewhat more concerning issue.
Arvind, hi there. Good morning. Let's talk a little bit about the overall, flavor of the market. It seems that across the board, a lot of brokerages are indicating that we will see a broad-based rally play out, and a lot of the mid-caps are now as well likely to play catch-up, that we're going to see favor, particularly in financials and some of the infrastructure stroke engineering names on the back of this. Is that, a sectoral play as well that you would be looking at on the back of what the exit polls have suggested?
Well, I mean, I think at the end of the day, it's which parts of the economy are benefiting, and obviously the private sector banks are big winners in this continuing NBFC squeeze, and if the economy is doing reasonably well and loan growth is going to be there, then those are going to be clear winners. As far as infra spending and continuation in that, I think clearly some of the companies that benefit from that would be winners, and frankly, there's a little bit of rotation, right? If FMCG is not doing so great, and if the auto sector is not doing great, and I'm not sure, whether the IT stocks or the pharma stocks are ways to play the domestic story. So then we're looking for domestic sectors where there can be benefit, and that certainly could be infrastructure related. As well as some of the other banking type of financial sectors.
Arvind, last time, and again I'm working with the assumption that NDA2 is coming back to power. That's a disclaimer here. When NDA1 came to power, the narrative of India changed. Achhe Din was the promise. Everyone thought that NDA1 will take India to a different promised land. But if we rewind and look at what has come out, they've taken some tough decisions, they've done a lot of good work, but the earnings promise is nowhere close to what was anticipated. So if NDA2 also comes to power, do you think this time around markets would be much more realistic? That euphoria, what we saw in 2014, that initial euphoria which came and Nifty move from 7,000 to 9,500, 10,000, that move will not repeat itself?
Yeah, I don't think there is anything that is been promised by this government that is a big bang reform that we're looking forward to, that can be the hope to latch onto in NDA2. Clearly, as you said, they've done GST, they've done the bankruptcy bill, they've done some long-term structural good, and hopefully that'll show up. But I think right now the economy is struggling with this mini Lehman moment, I guess, in terms of this NBFC continuing crisis with liquidity issues around that market. And I'm not sure that by the new government coming to power, that there's any, or the same government coming back to power, there's any magic wand solution for that can be easily defined. So therefore, I think you're right. I think this is a very different environment than the previous time when we were coming off a sluggish government with lack of action, and you had policy paralysis. So we can't say that NDA 1 was policy paralysis, NDA 2 is going to be magically better. I think NDA 1 did a lot of good stuff, but the economy is still stuck in a bit of a rut. And I'm not sure that there's anything magical that can change that.
Okay, Arvind, great to have you on the show. Thank you so much for joining in with that initial take on what the exit poll outcome means really for the markets, short-lived as it may be. That's the word coming in from Arvind Sanger.